Now let's take a look at our first financial statement. There are major financial statements in accounting. One of those shows what we've covered so far, basically the what equals the who. We'll imagine that this is my company, so I'll put Vince's company. And we've seen some transactions. So what we're going to put together now is at a certain point we're going to take a look at the balances in the accounts that we've worked with. We will imagine that we are taking a look at the balances at the end of January 2015. January 31st, 2015. So I'm putting together a statement here, and the statement is called a balance sheet. It actually has a more fancy name, but most people recognize it as the balance sheet. And there's some components of the heading that I put up here. I put the name of the entity, the name of the company. That's the perspective that we're taking a look at these assets. I put down the name of the statement. It's a balance sheet. I bet it balances. And I actually put down the date that it is effective, meaning that is the date that these balances exist at this particular point. It's very much like weighing yourself. If you had weighed yourself 10 years ago and you still use that same weight, even though it had changed, that would be misleading. So I want to know the date that these balances existed at this level. What I'm going to do is, in this statement, I'm going to list my assets. I have a couple of assets. I have cash, and my cash balance is $14,000. I also have vehicles. That's $1,000. So my total assets are $15,000. I then want to list my liabilities. And in this case, I have a notes payable. It's the only liability I have, so I will put it out over here, and my notes payable is $10,000. And then in my equity section, my owner's equity, I have one account, paid in capital. That's what I started the company with. And that is $5,000. And you can see here that my assets equal my liabilities plus owner's equity. I could even go a little bit further in on the statement, add my liabilities and my owner's equity to show that they come to $15,000 and that it matches my assets. In this case, the statement balances. It is as of a particular date. The heading shows the name of the company, the name of the statement, and the particular date that these balances are effective. I might have compiled this statement later, after January 31st. In fact, I certainly would have. The important thing to note, though, is that I don't change the date on when I prepared the statement. The date relates to these balances. In fact, there might be a third date. There might be not only the date that these are effective, the date that I prepared it, but the date that I actually printed the statement. So you should be aware that there can be different dates. You want to make sure that on the statement reflects when these balances are good for. So this is our balance sheet. And you see that I list the balances. And on this statement, you don't see if they are debits or credits. You simply see the totals. Because I know that when I prepare financial statements, I know that my assets are debit balances, I know that my liabilities are credit balances, and I know that my owner's equity is a credit balance. On this statement, we see that my assets equal my liabilities plus owner's equity. You can see how we built that from the trial balance. I could have not stopped to have done a trial balance and just extracted these totals from the accounts. The trial balance makes it easy for me to extract this information. Now, in computerized systems, I am not manually preparing this statement. This will come out of my computerized system, for instance, QuickBooks. but I want to be able to understand what this statement means. Now let's take a moment to see what it means. It means that I have $15,000 in assets. That's pretty good. I can look at the detail of those assets. I see, though, the bank has a claim to $10,000 of my business. So I've got some debt. I have some real debt. And that I have an equity of $5,000. So if a banker were to look at this, if I were to apply for another loan, they would see I'm already carrying some significant debt. So how is it that they can be guaranteed to be repaid? What will be the performance of the company? I might have to personally guarantee the loan to get any further financing. Balance sheet. Even though your computer might prepare it, you now understand what it means.